In this presentation, we will continue on with our comprehensive proprietorship problem, this time formatting the income statement. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We had, prior to this, completed the entire balance sheet. We did the prior balance sheet first, and I'm going to give some arguments for doing it first because again, it's a little bit different than you might see in some textbooks. The reason we did the balance sheet first, or the reasons for doing the balance sheet first, would be that we can start from top to bottom. We can work through the accounts, in other words, from the assets, liabilities, equity first, which is the way we see it on the trial balance. And because if we can complete the balance sheet, we will have more security, feel more confidence going forward, given the fact that the balance sheet is the double entry accounting system. It is assets equal liabilities plus equity. The argument for not doing the balance sheet first is that this number here may be more difficult to get to if we do the balance sheet first, because that can be broken out into its component parts of net income, done on the income statement, and equity, done on the statement of equity. However, if we see this number in total, it's easy to calculate in Excel if we have a well-formatted trial balance by simply highlighting the blue areas here, and that should give us that number. So if we can easily see that here, and that'll give us something that's in balance, providing us the confidence of assets equaling liabilities and equity, and being able to then go forward from there. And if you're working this by paper and pencil, and you don't have as well formatted a trial balance, for example, debits and credits in their respective debit column and credit column with no plus and minus to help format the formulas, then you could go through here still pretty easily with a calculator. If you have a 10 key, it's good practice in any case to add and subtract the credits minus the debits and get to what that number should be. And I would argue that would make things easier, because then now we know what that number is. We know it's right because we are in balance, and we just need to reformat it in terms of telling the story behind that number, the history of that number, the month's worth of history, which in this case will be the income statement, which will tell us 1,500, the activity. What it doesn't tell us is the beginning balance and investments and draws. That then will be done on the statement of equity. Once we have all of these, we will get to the 103,600. So that's what we're working on now. We're going to do the income statement, which is revenue minus expenses. We know the bottom line already if we have a well-formatted trial balance, which we happen to here, which is 5,100. We know that that's revenue, not a loss, because we see that it's a credit, meaning revenue is a credit represented with a negative number in Excel, credit for us in this format, minus the debits is 1,500. In other words, revenues are beating the expenses by that 1,500. Now we're just going to go over and pull that information into our income statement. Before we do so, note that we have this saying that it's for the month ended, different formatting than we saw on the balance sheet, which is just one day, one date. Remember that this is telling us that we have to have a time frame. We have to on the income statement. If we put, in other words, for the month ended on the balance sheet, it wouldn't tell us and wouldn't throw us off. We would still know, well, that must be at the end of the time period. But it doesn't add any information either, because whatever the ending time period is what the balance sheet will be. It's as of the end point of our financial statements. On the income statement, however, it makes a big difference if we were to say for the month ended, for the week ended, for the year ended, because this is a timing statement. It has to do with performance. So we want to be able to understand the difference here so that if we have a test question, we can format it, or if we're formatting it in practice, we can properly format it, and to be able to understand much better what does that actually mean. Why do we have one date on the balance sheet and a range here? Because this is representing timing like a stopwatch or something like that, and we have to indicate time here, whereas there is no time up here. There's just a point in time. Okay, so now we're going to go through this. The income statement is revenue minus expenses. Revenue is our first account here. There's only one account. Therefore, we don't need a subcategory. We're not going to say revenue colon subcategory and then put revenue underneath it, because there's only one account. So we'll just put revenue or income. I'm going to do that with a little formula in cell G20 by saying equals and pointing to that revenue. Now, we have two columns. We're not going to do the subcategory thing. We're just going to put it right in the outer column. Remember that these two columns do not represent debits and credits. It only represents subcategories. There is no subcategory here. Therefore, we're just going to put it in the outer column right off the bat. This is a credit over here. We don't want credits on our income statement. There are no such things as debits or credits on a plus and minus income statement because people don't understand them, and we therefore do not format our financial statements with them, although they're easier to use when making the financials. So we're going to put, instead of equals, negative of the 27,000 and enter. So that's our revenue or income. Now the expenses, on the other hand, are going to have a subcategory. So we're going to put our colon there, our expenses colon, indicating that it is a subcategory. Everything else on our income statement will be an expense. This will just be a single step income statement, so we'll group all the expenses in one area. Now, we're just going to pull the expenses over in the same order. Note that it might be the case that we have, for example, more expenses than we want on the income statement. More expenses, in other words, on the trial balance than we want on the income statement. I don't mean in dollar amount. The dollar amounts will be the same, but in grouping. In other words, for example, we might have utilities for different regions on the income statement on the trial balance in order to break out that detail for our internal reporting purposes. But when we go to the income statement, we may not want regions. We may group regional utilities expenses to one utilities expense number. So we may, in other words, group things a little bit differently. We may, in practice, format the order differently. A couple common formats of the order of the income statement might be the most up dollar amount, highest dollar amount to lowest, or some other relevance type of importance. But again, the ordering, there's no set rule that's laid out in stone on the ordering either. It's more going to be a preference. What do we think is going to be most effective for the reading of the financial statements? So in our case, it's going to be a simple format. We're not going to regroup anything. We're just going to pull over the expenses as they are. So here's all the expenses. We're just going to pull them over. We could just copy and paste them. I'm going to do it with a little formula so that we can see each one as we go, because that'll be great and emphasize what we're doing here. So we're on G22. We're going to say equals and just point to that wages expense. Enter. Then we're going to put utilities expense by putting equals and pointing to utilities expense. Then we're going to go to supplies expense by just saying equals and pointing to supplies expense. Enter. Then we're going to go to depreciation expense by just putting equals and pointing to depreciation expense. Enter. And then we're going to do insurance expense by just saying equals and pointing to insurance expense. And then we get to do this one more time for the telephone expense by pointing or saying equals and then pointing to the telephone. So it's just as straightforward as that. We're just going to pull them over. Again, the grouping may change in more complex financial statements, but the number amount, if we add these up, 21,900, should remain the same in total. Now, we could have done that a bit faster by doing the autofill, so I'll show you how the autofill would work. We can just delete these and do this a bit faster by putting our cursor on wages expense on the autofill little square, and then left clicking, and then auto drives it down. Dr. Phil does the spelling here. So there we have it. And hopefully Dr. Phil corrected any spelling problems on the way. No, Dr. Phil will not correct the spelling problems. Just copy whatever's there. Okay, so now we're going to bring over the numbers. So we're going to do that with a formula as well. So we're in the inner column, representing that it is a subcategory. We're in cell H22, where we say equals. Point to that 6,005. And again, I'll do this the tedious way to emphasize where these numbers are coming from. Then we'll do the autofill. So enter. Then we're going to pull over the utilities by saying equals and pointing to the 1,300. Then the supplies by saying equals and pointing to the 11,000. Then the depreciation by saying equals and pointing to the 1,000. Then the insurance by saying equals and pointing to the 1,000, like the second 1,000. And then telephone expense by saying equals and pointing to the 1,100 and enter. Now, yes, we could do that faster with the autofill, and once you get to know the autofill, of course, I would recommend doing that if you can within Excel. So for Excel purposes, we'll delete these and do it one more time the fast way. So we're going to delete these, put our cursor on the 6,500. We note relative cell references, so we put our cursor on the fill handle, left click, and autofill down. There we have it. Now I'm going to underline this final cell, go into the Home tab, the Font group, and underlining. Now just note that if you type this number in and you had a pre-formatted worksheet, this would probably be underlined for you already. But if you autofill the numbers down, it could remove that underlining because it's autofilling both the format and the numbers. And you'd have to go back in Home tab, Font, and underline. So just be aware that autofill could change formatting, and you want to be aware of what's going to happen. Okay, so then we're going to have total expenses here. We're just going to say total expenses. You type that in. Double indentation, that's going to indicate that we are now summing up the subcategory. All we're going to do is take the sum, which is going to be the 6,005 plus the 1,003 plus the 11,000 plus the 1,000 plus the 1,000 plus the 1,100, and that'll be brought over to the side. We're going to do that with the sum function. So within I-28, we're going to say equals SUM. Double click that sum function and highlight from the 6,005 down to the 1,001, bringing over that 21,009. Now again, if we have a well-formatted trial balance, it's easy to double check that number. We just highlight those numbers and Excel will say, yeah, 21,009, that's what we have here. We're looking good. Now we're going to go to the bottom line on the income statement. And note that net income, bottom line, is going to be revenue minus expenses. Also note the formatting here when we look on the income statement. We're not saying less revenue and expenses. We don't have a negative number on the expenses to indicate where you have a subtraction problem. So just income statements, just note that the financial statements, again, could change a little bit in terms of their indications of operational operations, like adding, subtracting. The income statement, most income statements will just assume that the reader knows that we're going to subtract revenue minus expenses, and therefore won't indicate it with either wording or sign. Whereas in a case where it's less than obvious, such as the accumulated depreciation up here, we often will indicate it with a word and possibly sign. So there's some inconsistency with the financials sometimes, and we just have to be able to know some things. And then also note when we calculate net income, the two subcategories are in the outer column now. So we don't typically go from column to column here. We're not going to go, from this column back to this column and then back to this column. We've put the two numbers in the outer column, and we're just going to do something with the outer column, meaning we're going to take revenue minus expenses. So within cell I-30, we're going to say equals, point to the revenue 27,000 minus the expenses 21,900, giving us that bottom line number, that ending number on the income statement, net income of 5,100. Now that should match the 5,100 here. And again, if we have a properly formatted trial balance, we can just take a highlight, the credits minus the debits, the revenue minus the expenses, and it'll give us that number quickly. If we don't have a nicely formatted worksheet, meaning all these numbers are positive and in two columns possibly, then just take the credits minus the debits in a calculator, and you should be able to come to the check figure of 5,100. Now remember, we're trying to get to this number here once we get the income statement and equity done. That's how the income statement fits into the double entry accounting system, fits into assets equaling liabilities plus equity. In order to do that, we found all these numbers, because remember that number is all these numbers, 103,600. We found a home for all these numbers, which I'll indicate by making them yellow. And now once we add that net income, all these numbers, I'm holding down Control and highlighting these to those numbers, the beginning balance plus investments minus draws, we will get to the 103,600. And therefore the equity section is going to add these two numbers together, and it's going to tie out to the income statement by just giving us a lump sum net income, which will be included to show us the beginning balance plus investments minus draws, giving us the ending balance in equity 103,600, which will then match the balance sheet, and that'll be great. For more accounting information and accounting courses, visit our website at accountinginstruction.info.